Welcome to NAILBA's ID Network. I'm your host, Katie Fallinger, and here on the ID Video channel, you'll see exclusive interviews from changemakers and key voices within independent brokerage distribution. NAILBA CEO Dan LaBert recently sat down with Bill Shelow, President and CEO of Libre Insurance Partners. Take a look.
Tell us the story of Libre, right? We're in a changing marketplace. I'd love to hear the history of how LifeMark and BRAMCO came together to be Libre.
I guess it was June of 2018. The board decided that it would be a really healthy exercise if we had someone come in and do a strategic review of LifeMark's strategy and what our position is in the industry. So we hired Mark Hug as a consultant to do that strategic review. And he conducted that review over a period of months. He talked to industry executives, he talked to our partners, he talked to other folks in the industry about the brokerage business. And he presented those results to us in our October board meeting that year. And basically, he felt that the strategic value that we offered to partners was very solid, that we had a great relationship with our carriers, and that was all great. He said, but the one thing that we lacked was scale. And as we discussed this, the reality is that we knew distribution was going to change, and that we felt that if we were going to be prepared for the change in distribution, not even knowing exactly what it was going to be, that we would be better prepared if we had the right scale.
Got it.
And we also had kind of a diversification need to diversify our business a little bit more than we were as LifeMark. So then the board started talking to me about, we did the math about how much, how bigger should we get. And Mark is an actuary by trade, did all the calculations and said you probably need to add 30 agencies to the 38 that we already have.
What was the immediate response there?
Well, so the board said, well, Bill, that means you need to recruit 6 agencies a year for the next 5 years. And of course, I had been there 7 years and had recruited a whopping 5 agencies in 7 years. So I said,
well, retention's important too.
It is. It is. So. And we talked about the quality of the agencies, in the BGA market, and said, wouldn't this be easier if we did this all at one time? I said, we have a tremendous amount of respect for BRAMCO, a lot of similarity in our organizations, both owned by its partners, long history in brokerage. I said, I think it would be really interesting if we talk to them about a potential merger. And the board said, hey, why don't you give it a shot? So I called Mike Heffron up and I said, hey, let me tell you what I've learned in this strategic review. And I talked about scale and I talked about diversification of business. And he said, well, let me think about it for a little bit, I'll give you a call back. And about a week later he called back and he said, it would be worth us talking. So we executed an NDA and started talking in January of 2019.
The rest is history.
The rest is history. We got the board on, got our board on board, so to speak, with some of our initial concerns. We determined pretty early on kind of what the leadership structure would be, because that's a tough thing to wrestle with, and we thought if we settled that, it would go a lot smoother, which we did. And signed a letter of intent in April, let the partners know this was going on, because it gets very hard to try to do this stuff in secret, so we felt it was better off to make everyone aware of what our intention was, and we did that. And I will tell you that the partners were absolutely fantastic through the whole process. They were extremely supportive. And I think they recognized too that scale was going to be important. And you take 2 really strong organizations and you bring them together that have similar cultures, similar values, that it was only going to make us stronger in this industry. And so we worked pretty diligently, had a lot of changes. You know, we worked on changing the agency compensation program, some pretty tough stuff, really. But we had a shareholder vote on September 16th of 2019. It was unanimous from both parties, and worked our way through the transition and flipped the switch on January 1st as Libre Insurance Partners.
So looking back, is there a time now that you and Mike could laugh about, since it's no merger, not necessarily acquisition, no small undertaking. Lots of personality, lots of long-standing history. Is there a time now, the two of you looking back and say, didn't think we were going to get over that speed bump?
Well, I think what was kind of interesting is when we first started, we signed the NDA, we met at Mike's place, and we emptied our briefcases with our financials and our production reports, and what a combination of the two organizations would look like fiscally and from a production perspective. And as we're digging all through this and we're making notes and we're kind of round numbering this type of activity, I said maybe I'll go back and I'll see if I could build a spreadsheet and get us something that we can look at. And he just literally grabbed the stuff out of my hand and he said, listen, you and I are going to figure out what our strengths are. He said, I'm not sure I know what yours are, but I can tell you what mine are. I'm an accounting guy, I'm a numbers guy, I can do this a lot faster than you. I'm like, okay. And away we went.
Right.
Since that point in time, I have never done a spreadsheet in this exercise. He has done it all.
Well, it seems like a great partnership where, and I think a lesson for the industry, if I get to say that now, since I'm, a whopping, almost 3 years in, about looking at the marketplace, seeing where there are strengths that could be brought together, and building that scale. So let's talk about something earlier you mentioned about recruitment and retention. Always tough. I mean, it's tough in the association world, tough in the IMO world. What makes Libre an attractive IMO? I mean, we have over, last count, 1,400 BGAs in this country. Not all traditional, but that's the number we're going with as of 2019. Lots of BGAs are out there, some still not affiliated with IMOs, some have more of a retail setup, some that may be getting tired of one relationship or another. If those BGAs were to look at Libre, what's the value prop, right? What makes Libre an attractive marketing organization for them to engage with?
Well, when we look at what our roles and responsibilities are as an organization, and we look at our value proposition, our mission, why we exist, we focus entirely on adding value to our partners. And we do that by providing, not only access to the marketplace as far as carriers is concerned. We have 21 carrier contracts, so we certainly can bring the market to the agencies. But most importantly, we really do things that add value to what they do every day. We make sure that we provide resources that are valuable to them, that help them differentiate in the marketplace. We do a lot of stuff, and we have a lot of what we refer to as full-service BGAs. So if you're a full-service BGA, in other words, you're doing your own processing, you may have some underwriting skills in your organization, things like that. We have a whole portfolio of resources. We have access to reinsurance company manuals. We have our own medical director. We have a proprietary system to do quote shop, called Quote Shop, to do quick quotes. So we've built or bought a tremendous amount of resources for the partners. We own our own reinsurance company that's 100% partner owned, which no one else in this industry has done. And we have our own proprietary quoting and application and processing system called Vive. That's a drop ticket, and we have 5 of the largest term carriers in the business on that platform, and that's proprietary to us. So not only does it do the processing, it provides case management feeds for your producers, and it's a very robust system. So resource after resource, we just try to build or buy things that we know are going to be of value to them. And that helps differentiate them in the marketplace. That helps them drive business. And that's why partners are attracted to and stay with Libre, with our respective organizations.
Well, and I'll add in, again, the value of the brand. LifeMark, BRAMCO, two well-respected IMOs in our space. Coming together, it's just increased brand awareness of they're good agencies, they're good people, and things get done right and business gets done. I want to jump into something that I know you speak frequently on, and obviously, here we are at Libre, the first annual partners meeting, and a lot of interesting main stage presentations, but thinking radical and how 2020 is different, right? Regulatory challenges remain. Merger and acquisition still very, very serious happening in our space. What are you talking to your agencies about as far as trends, challenges, positive, negative? If you're a BGA coming into the market now, what are some of the issues that you need to figure out fast?
So first of all, fundamentally, I would tell you this, that I think the distribution business, the life insurance distribution business, is a great business, and there is a tremendous amount of opportunity in that business. When you look at our core agencies in Libre, the 60 agencies that make up Libre today, we're well over $400 million of life business that we did in 2019.
Yeah.
Okay. We grew over 4% last year, which I'm sure the industry probably didn't. I haven't seen the numbers.
Not over 4%.
No. So we continue to outperform the industry. Our linked benefit business is extremely strong.
Yeah.
So when I look at distribution and when we talk to agencies about the success factors that go in there, I tell BGAs, and when we work with BGAs, we talk about two things. We talk about adding distribution. So if you're a BGA, your focus needs to be adding distribution to your organization. Okay. The second thing is you have to be investing in your business.
Investing how?
Investing in whatever it takes.
Infrastructure, technology.
To add distribution. I would tell you that the most successful agencies I see from a growth perspective do those two things. They add feet on the street, so to speak, to go out and recruit other agents, advisors, producers, and they add technology to make sure that they're extremely efficient, because they're always managing their margins, right? So those are the two things that you tend to invest in.
Let me ask you a question. Again, another one. What about the advisor experience? The advisor experience with the agency. You're talking about feet on the street and investing in infrastructure. Is there anything that's standing out, given that the way technology is changing, the expectations of an advisor working with a brokerage general agency? Are there easy sort of low-hanging fruit that an agency could look at and say, if I want to attract more advisors, I need to do X?
I think you need to establish relationships. I think that aspect of the business really hasn't changed. There's a lot of organizations out there that have focused on process and say, well, we're going to market the best, fastest, easiest process out there. And it doesn't necessarily move the needle. Okay?
Yeah.
Because this is still a relationship business. There's a lot of trust associated. I mean, if you're an advisor and you're working with clients that have entrusted millions of dollars to you, that ability to work in a scenario with someone on our side, that advisor has to really trust what's going on from an advice perspective, from a support perspective, from a case design perspective. And if you're doing point of sale, that's critically important. So that the relationship aspect of our business really hasn't changed. It still is really the strength of our business.
So the more things change, the more they stay the same.
Right.
Yeah.
And and you asked, what are the other things we talk about today with regulation? Obviously, this abundance of focus on the best interest and fiduciary rules out there are something that obviously we pay a lot of attention to. To make sure that we've got the right resources for the advisors. so that we can make sure that they're not in any risk from that perspective, and we have a good portfolio of resources to make sure that we can fulfill their needs.
Yeah.
So I think that's critically important. The other big challenge we're going to have is the economic environment today. The
interest rates?
Yep, the low interest rate environment is going to be extremely challenging.
Great for a mortgage, but not so much on the carrier side.
Exactly. So, this is going to be a real challenge for insurance companies from a pricing perspective, particularly where on products that have the longer guarantees, which command a lot of capital and reserves. And so, we're watching that very carefully. And again, our responsibility is to make sure we've got the right portfolio of companies for our BGAs, so that they make sure that they have adequate products.
Yeah.
And the other thing too is we work obviously closely with the companies to make sure that we're aligned from a product distribution perspective.
That's evident here
well.
at the partners meeting. Mm-hmm. Not a major insurance carrier that's not here.
Right.
So, last question I have for you.
Okay.
And a little curveball, but I'm going to have some fun with you.
All right.
So, you and Mike Heffron were on the interview selection committee when I was going through the interview process.
That's correct.
And I got the job, so despite your no vote, I'm just kidding. We talk about changing NAILBA membership benefits, the membership value prop. LifeMark, BRAMCO has always had just about 100% involvement in NAILBA. Where do you see the value of NAILBA membership? Why do you encourage all of the Libre partners to make sure they support NAILBA and join NAILBA? What is your point of view on NAILBA as an organization being the voice of independent distribution?
Well, I think two primary things. Okay, first of all, I think that the ability for NAILBA to deliver on this concept of best practices, of the best thinking in the industry by bringing the best BGAs together and giving them a forum to really thrive in that arena. Because I think that, again, distribution's going to change.
Sure.
The strong will survive, the creative will survive, the ones that take initiative and invest in their business are going to thrive.
And the ones that build the relationships.
Build the relationships, but this whole concept of being better, being best, evolving all the time, that's the role that I think NAILBA can help play, because that's critically important to the future of our whole distribution organization. Sure. And then the other thing I believe that NAILBA can do is be that voice of independent distribution. I know that we work closely with AALU and NAIFA on the government relationship side of things.
Yes.
And that's great, as long as they're getting the message from us about what our real concerns are.
Sure.
I think that we've looked at some of the scenarios in the past where perhaps the voice of independent distribution wasn't really at the forefront of some of the efforts.
Sure.
And I think that the role that NAILBA can play is still, even though we're not actually engaged in the lobbying efforts, so to speak.
Directly.
Right.
Right.
But I think we owe independent distribution that voice to make sure that we, through NAILBA, sit around the table, clearly understand, and then articulate what our issues are with respect to any of the regulations that are coming down the road, and then make sure that we get that in the hands of and in the voices of the folks that we're working hand in glove with to interact with the regulators.
So with that, we can expect Mike Heffron at BRAMCO, Bill Shelow at LifeMark, Libra's commitment toward 100% membership in NAILBA.
Absolutely.
There we go.
Okay.
That's it.
All right.
Thank you, Bill.
You're welcome.
Watch for new videos in the ID Network every week at nailba.org. And be sure to follow us on social media. We've linked all the places you can find NAILBA below. And don't forget to save the date for the next annual meeting. NAILBA 39 happens November 18th through the 20th in Hollywood, Florida. We've got those details for you below as well. Thanks for watching, and we'll see you back here soon.